Welcome everyone to the Kendall Report. I'm Bob Kendall. It is Tuesday night. We had quite the day in trading on Tuesday. Lots of volatility, plenty of war games going on, and it's just getting pretty insane. I have a couple rants for you, I think, tonight that I'll probably end up going on. We had a very interesting session in the live trading room on Monday, and it was, the volatility was absolutely insane, as I'm sure many of you watched. I'm actually watching the market starting to sell off again. Maybe there's another bombing raid or something going on. Flashing back just for a minute, I'm just going back to the days of the first Gulf War when the Scud attacks were happening. That's what it was like today. Sirens going off, bombs, war's ugly, and markets responding. When the sirens went off, markets sold off, then they stopped, and markets rallied. It's just so reminiscent of back in that day. And it was pretty insane because we were literally had the TV on for one reason, to see when those events were going to happen, and traded off of them. So it does mean something. A couple things. Let's just review yesterday before I get into some of the details for today. So we had S&P ended up minus 0.3. It was down about 1.5, almost 1 3/4, I believe, overnight, and then just started coming back throughout the night. We continue to stay over that 42.12 number that I've been talking about on the S&P futures. NASDAQ ended up 0.4 and Russell up 0.4. So we saw these huge rally backs from as the markets just kept coming back all day, and the algorithms were running everything as usual. The interesting thing, looking at the sectors, guess which sector was the big winner yesterday? Of course, it was energy, up 2.8%, oil up 4.3%. And there's before I go into any of these riffs on this, I just want to cover tomorrow. The only thing economically coming out is the ISM manufacturing, not a real big report that's watched very closely. We have 232 earnings reports coming out. We've got a bunch of banks. The Canadian banks are coming out, and it's just all about retail tomorrow. So that's going to be interesting. I'm not sure who's paying attention to those things at the moment, whether anybody's actually watching any of the economics, which seem to be completely dominated by some of the things going on. So let's start off with just talking about that energy rally. We're seeing some insane things. I've talked about this before. The U.S. is still buying like 550,000 barrels a day from Russia. Meanwhile, we're sanctioning them, but we're buying their oil. And the U.S. is pulling back on leases and actually sanctioning our oil companies, not the Russians. So if any of you have any solutions or thoughts on that, just put it in the comments. I'd love to read them later. I get a chance. I mean, this is the most insane policies I've ever seen in my life. And they're even restricting, at the moment it appears, restricting any types of exports to Europe, who needs natural gas. And the U.S. has the cheapest natural gas and the cleanest natural gas on the planet. So figure that one out, okay? So I'm all ears, as they say. One of the things I want to talk about is some of the sanctions that we're seeing, the SWIFT restrictions that they're putting on. That's a big deal. It makes things cumbersome, but they haven't put any kind of sanctions or restrictions on any of the banks that actually transact oil, which is interesting, because if they do that, that's going to make it impossible for Europe and others to transact and get what they need. Unfortunately, what we're seeing, and what I was just talking about with the U.S. restricting oil, we're trying to go down the same path that Europe did, especially Germany, and we're trying to go to this green situation and go to alternative and solar power, all kinds of different alternative energies, and electric cars, which is a joke. I'm not saying that Tesla's not a real deal. I'm saying that there aren't going to be all electric cars for a very long time. And so the underinvestment, I think I showed a chart the other day in the stream, the underinvestment in energy to the ESG, everybody, they've got all types of situations going on with the top end of some of these energy companies as far as thinking green and trying to get into all alternatives. I'm not saying it's a bad idea. Don't misinterpret what I'm saying. I'm saying that right at this moment when we need energy and demand is spiking and now you're trying to disrupt everything, it just doesn't make sense, the policies that are going on at the moment. So let's talk about something that I think is potentially one of the big deals. And I'll go through this in a minute because I talked in the live room yesterday, is to watch out for a sign of dislocation of capital. Okay, let me explain that. By restricting the central bank of Russia, disrupting all these oil flows, doing some of the things that have happened, this could really cause a huge dislocation of capital. And let me explain this, because the planned consequences of the sanctions are to cause pain to Russia. But if they start to disrupt too much of European bank flow to Russia for the oil and those things, all of a sudden everything starts to get dislocated. That may be why the US dollar has been rallying like it has. And there's a reasonable bid in gold that kind of dissipated pretty quick after the spike the other day. But the bottom line is the planned consequences are putting pain on Russia. The unplanned consequences are potentially disrupting the cash flow across countries, not just Russia. There's something, if you recall, those of you who've been around for a while, remember the 2008 situation? That was where there was a counterparty risk. That's what could happen here. All of a sudden, one party can't pay another party because the Russia bank got disrupted, so it breaks the link. It's Lehman-style stuff. And once you start to get the counterparty risk going, it just spreads like wildfire. We should know better. But everybody is so focused on the planned consequence, they may not be seeing what could happen here with a total dislocation of capital. So I'm going to bring up something, I'm looking for something, right? And I found all of a sudden I'm doing a review before I start the stream tonight, and Bitcoin's up $5,000 right now. And typically it's a risk-on asset. So, and we've only seen a couple of times where Bitcoin has become an alternative asset. We might be seeing it again right now. And it may be because of some of these things. So I told everybody in the live room today is to watch out for something unusual happening in the financial system. Maybe it's this Bitcoin bid. I'm going to show you the new objectives that got generated from this move that we're getting right now. And it's pretty crazy, I have to say. And so maybe all of a sudden this is where there's a big chunk of cash going. People get really scared. And it's really weird, like in the Twitter sphere and around social media, to watch people. I don't know, we're probably the closest we've ever been to a true nuclear conflict. And people are like, I don't know, excited and celebrating or something. I'm not going to go very deep at all in any political thoughts or anything like that. But from a geopolitical viewpoint, just from these unplanned consequences, the wrong things happen. This gets out of control. It's about the banking system. It's about a lot more. So be very, very cautious right now. Our model's got a little bit of traction tonight, but as you know what I've talked, and I'll go through the details here in just a minute, we basically don't own very much. I think we're 17% long on the intermediate models, which is basically 8 out of 10 stocks or symbols in our database are neutral right now. And on a short-term basis, it's about the same. It's at 22, 23%. So from a viewpoint of how I see the world, not just through an index, not through a trend line, not through just looking at the indexes, which we spend all the time on this channel talking about, but going in deeper and looking at the breadth of the markets from the number of trends. And basically, WaveTech and Portfolio Expert is a trend following system. And I think that's how I see the world, right? There's not a lot of trends. And certainly there are trends, they're down. There's not a lot of uptrends because our models are long only models because they were developed primarily for the investment community, and most investment advisors do not go short. Okay, it's just very unusual for them to do anything. And actually probably 90% of them are buy and hold, doing just doing, allocation strategies and allocating out 60-40, doing that type of stuff, stocks versus bond. And, you're really just not looking at very dynamic investment strategies. So when you get into our world, we actually are willing to go to cash. We're willing to change assets around a lot. But this is the way I see the world, is there's not very many trends, and specifically uptrends. And that doesn't mean there's not noise and the market can't bounce around in a range. That's basically what I've been talking about for the better part of a month, is that we're going to stay locked in this range. So let's go ahead and take a look at the database. There's several more things I'll end up going through in tonight's stream that I want to discuss, and they'll just come out as we flow through the chart. So let's go ahead and take a look at the database. So let's go to the daily models here. And what we're going to see is right now we are 23.1% bullish. We look at the rotation that we had tonight. We did have more buys and sells, 651 buys, 170 sells. No big rotation, 23%. Those of you who watch the channel all the time, you know the deal. It's 42% or better to demonstrate some kind of enough traction and enough symbols to participate to drive the markets into an uptrend. And we're a long ways from that. And I don't see that type of rotation happening. We may get back into the 30% level if we continue to consolidate and hold these levels, but it doesn't look very promising, at least at the moment. And this is what I was just talking about. We have an awful lot of symbols that are in neutral phase. Just talking a little bit more about our database, like I said, we're just not, there's no traction. We don't have a lot of risk. From what we do primarily in the world is manage portfolios, right? We still have well over $15 billion out there that we're managing with investment advisors and in that community. And then we have a lot of retail folks out there as well. And, we just don't own very much. So we're not taking any risk. We're risk off at the moment. We're going to stay like that, it looks like, for a while. It could last, as I've said, if we go through this trading range, it could last for a while. The only sector that's working, if I were to bring up the weekly models, is energy. And I've been talking about that for a while now. And we go back to November of 2020 is when we first started to really hype up and start to get a lot of traction in the energy sector. Let's go ahead and take a look at some of the technicals here. Going to the S&P, this is an interesting configuration. And what we're seeing here is the PPM1 is turning down again. It's at minus 0.23. We're trading just above the 10-period moving average. I'll bring up the market grid here. As we look at the market grid, I think it's fairly interesting. R1 4405, that's a long ways from here. That's a 50 handle run. And S1 is right now is 4430. So we're trading in the middle of nowhere. We've had a high of 82 so far, and we're trading right now at 4362. I suspect we will get below S1 4330. The next number below that is 4288. And it's interesting, we have 2 days where we had these reversals off of these big lows. If we maintain a reasonably stable and we get a rally early on, we'll probably see the opposite happen finally. But there is one point that I want to talk about. 4419 is the 21-period moving average, and if you look at PPM2 here, it's minus 0.15. There is right now about a 50-50 chance to get above that, but if we close lower tomorrow, the probabilities are going to start to drop substantially to get back over that number. And right now we're dropping about 6 handles per day. So that'll be down at 44.15, we'll call it at 44.13. And then it could start to accelerate. And we're seeing some acceleration just with a little minor downtick with 5 handles down at the moment. So this pattern is starting to become very vulnerable. I continue to talk about this low that we had over here, which was 42.12. That's still a valid pivot point. If you look at just the grid for today, 4208 is STX. So we have a monster volatility range. The VIX is up at 30.15. So we're seeing some serious volatility, and we've been watching things print like as far as S3, R2s. That yesterday is a good example. We printed just below S3. R2 was 44.50. R1 was 44.17. So we didn't quite make it that high, but we printed down to all the way to S3 and then rallied back, almost closed higher. It looked like we were going to try to close higher in the S&P too, as the NASDAQ and the Russell got a pretty decent bid there. But this pattern is still vulnerable to the downside. The only positive, those folks that are in the live room, I talk about these WaveTech market grid bubbles. This is a little bubble formation. You can see them over every time there's been a low, we get this little bubble. So we have another bubble, but what we're really doing here is something much bigger. We're just locked in this sideways range. I'm going to go over to the weekly chart. Actually, I'm going to go to the monthly chart, and since we started a new month, this is the market grid down below. This is the potential range for this month. And there's one thing I do want to point out, the rising 10 pattern into this market grid is important. That is right at R1 44.77. So there is a possibility of printing that level sometime this month. The S1 42.58, S2 41.35. So we printed 41.01 last week. This is the monthly futures chart, nearest futures chart, but we still have positive numbers across the board. And so most likely, I think we'll stay probably S1, R1 for the moment. If anything expands, I think there's still a possibility, just because of the intermediate charts, to expand down maybe to an S2, be 41.35, which would be a retest of that spike low that we had last week. But overall, we're still going to stay locked in this sideways pattern here and just waffling around here. We've seen a lot of volatility. I'm sure a lot of you folks are watching Tesla. We saw a big move there yesterday. Even Kathy Woods got a bid. That's how good things were for that yesterday. So the NASDAQ and some of these meme stocks are trying to come back a little bit, some of the so-called growth stocks. But this pattern is likely to continue to exist. Going back just to the daily real quick on here. So look for absolute R1 4405, S2 4288. We should see continued volatility, and I still think there's a fair amount of risk in this market, and it's going to be interesting, like I said, in the unintended consequences, whether we start to see any kind of disruption of movement of capital or anything like that, and maybe Bitcoin's getting a little bit of that bid right now. Next market I'll discuss is the NASDAQ. NASDAQ has the same basic configuration. PPM2 is at a minus 0.24. That number is at 14,374. So far, a high 14,270. Just looking at the grid. R1 is 14,385. So we're almost to an R1. So look for R1, S1, possibility of printing down to S2. And S2 is fairly right below where the 10-day moving average is. If you look at the PPMs, they're starting to roll over on PPM 1 and 2. So this is really what it's suggesting is not so much a big rollover and decline new lows. What it is suggesting more of a sideways pattern here and likely to continue. The pivot points on the upside will be that 21 period moving average 14,374. And if it gets above there, then we could go as high as 14,714. That would be an R3 pattern on a daily. Next market we'll look at is Russell. Russell did continue higher, had a narrow range compared to the other indices. We're moving up towards the 40, but if we look at the PPMs, it's a completely different configuration here, especially on PPM2 is accelerating. It's actually at a trend mode, and that support level is coming through right at 2024. 2048 was where we went out yesterday. We look at the market grid for today. This is the cash, looking for probably S1, R1. If they get it, and use these numbers here on the grid, is R1, if we take that out, then we'll go to 2080. S1 is 2032, and use those as pivot numbers. It's going to be volatile, and like I said, for the most part, what we're seeing in all these indexes are really just a sideways trading range, slight bias to the upside here on the Russell. I'm going to come up here real quick. I just want to talk about something here, and I'll put some things on the screen here. But we're about to release all of the indicators out here. We're looking at PPM 1, 2, and 3. This is on TradingView. This is our webs that we use in the trading room, and we've got quite a few indicators, 1, 2, and 3. We have cycle finders, and we've got a pattern recognition tool and some other tools that are going to be coming out. So watch your emails, and we'll be putting a link in the next couple of days on how you're going to be able to get access to these indicators. So it has been an absolute pain in the ass working with TradingView, but it's getting there. So I just wanted to let everyone know. So for the rest of the show, we're going to go through and we're going to look at the 10-year. We're going to go right through the typical gamut, probably spend a little bit more time on Bitcoin tonight. So let's go ahead and get into it. I talked about this last night, which was that the 10-year could go down to 1.84. And that's exactly where we finished, 1.839. Right on the 40-period moving average. Look at the PPMs. PPMs are now in a downward formation. On the PPM 1 is a negative 0.59, suggesting there's going to be substantial resistance up at 1.97, and that's dropping about, I think, about 1 basis point per day. But the acceleration we're seeing on the PPMs are very interesting and setting up a continuation of some lower rates. And I know a lot of folks are talking right now that the Fed isn't going, they're going to do a quarter. Everything's changed because of the Ukrainian situation. I will say they've tried really hard and maybe have succeeded at changing the dialogue that all of a sudden it's Russia's fault that oil's up and all this stuff and inflation and everything. So they've shifted the blame a little bit, but I don't think it's going to work. I still am saying that the Fed will continue to raise rates, probably 50 basis points. We're just a few weeks away from that meeting. I don't think they're going to change anything. The one positive thing, which I'll just put on the screen here, is that the yield curve is starting to expand a little bit. So that's a positive. We're back to 0.46. We get down to 0.36, so we've moved 10 basis points on that 530 spread that I talk a lot about when I'm covering this thing. So you can see this is the daily, and you see it's starting to base out here. Anything greater than this is going to be positive. So that, for right now, a lot of what's going on, this has to do with the flight to safety just coming into treasuries. And I covered the Dow last night, so I won't do that tonight, but we'll continue to keep an eye on that as well. I mean, it's likely, like I said, just to mention the Dow, it's likely to get well over par, probably on the Dow index, probably get into maybe as high as 102 plus. I know I was told by many folks on the YouTube channel that was not going to happen. The Dow was going to go down. Not at the moment. And there's clear trends that have formed. I covered that in last night's video, so you can watch that again there. But overall, the 10-year, I'm going to go to a weekly chart here. And the weekly has gotten to the extreme for the week already, and it's just Monday's completed, right? But 1.834 is STX. There's also a 10-week moving average at 1.823, and that has an upward slope 1.94. So there's only about a 10% probability that we would finish below that we'll call it 1.84, 1.83 on Friday, and realize we're coming into Tuesday's trading, but that should not happen. We've got a lot to go through this week. We got ADP and unemployment, a lot of other things to actually look at there. Next market I'll cover is crude oil. Crude oil saw that spike up over 100. We did catch a pretty good bid. We're at 96.40. We're up another 0.71 right now. We've been up at high as 96.74. This is the weekly chart. So the extreme has been 99.10 so far this week. And we've got great trends going across the board here. We've got plus 2.99, 1.29, and 1.21. So we have that rising 10 pattern. As I've talked about before, the downward support is right around 89, 87 is the extremes. I don't see those being reached at the moment. Like I've been saying, as far as the energy sector goes, I think as long as we stay above 92, the stocks in that energy sector are going to do very well. So I don't see them declining, maybe a consolidation on some of them, but we're still seeing some very nice trends unfold at those levels. The daily chart on the crude, same kind of configuration. We got rising 10 and 21 inside of the grid. We've got a volatility spike that's going on. So when we get these bubbles, they're the same way on the top side as they are on the bottom. You can see here's one of those bubbles right here at the low back in December. And then there was another one back in September. But we're looking at this being a possibility of a large consolidation. Like I said, extreme 87, probably stay above 92 and just trade sideways here for multiple days. Unless something, and with what's going on in the geopolitical world, there could be something bigger than that happen. Next market I'll cover is gold. Gold continues to hover just above 1900. That spike that we had all the way up to 1976 last week was pretty much just almost like that. If you recall, it's way over here on the far left where I just put a cursor. We had that flash crash low. That was a significant low. The same situation here. This is the inverse of a flash crash where we had this big short covering rally, that spike high. That's going to be a significant point, I think, for a while. The best that we can expect out of gold now is probably staying between 1880 and 1920. The good news is the PPM1 is at a 0.26, and market is trading right on that value. 1901.70 is the support line, and it's going up about $4 per day. So to remain above that, we're going to have to be 1905 and continue to climb along that line. The PPM2 is positive, 0.27. Everything is in good shape as far as the trend goes. It's just that spike is going to be controlling the action. You can see we've got the big bubble formation on the gold, so that is likely to keep this market in check for a little while. Okay, the final market I'm going to talk about tonight is Bitcoin. As I mentioned earlier, we're up 5,300 bucks, and this may be, if you look at the PPMs on this page, this is a significant situation. When the PPMs, they're all turning up at the same time. So what I have on the screen, PPM 1, 2, 3, and the WaveTech 200, so that tracks the 200-day moving average. So everything is accelerating up. The 200-day moving average is actually moving higher. This type of configuration suggests we could go as high as about 47.5. But what I'm going to show you on the weekly chart is really the real story here. So let's go ahead and take a look at that. We got new weekly Fibonacci targets here. I'll bring it on screen over here. This is some crazy numbers here. 62,000, 73,000, target 2. That's the yellow up here. And the red is 80,449. Now, the last time we had some crazy numbers were way back here when we were printing, and it was talking about 85,000. So all of a sudden, we've recalculating this, and I'm just going to move this over. I'm going to draw in this pattern, and this is a pattern we talk a lot about in the live room all the time, and this is, I'm going to show this to you just very quickly. Basically a 1, 2, 3 pattern, or ABC. I'm going to draw this in. We got 1 up, here's your 2, and what's happening, these values are being calculated by a swing. So the blue is that this first leg here is what we call wave wave 1 or an A. This one over here is the 3 or the C. And typically when you get in a pattern like this, you'll get at least an equal, which will be right here, which is the 62 number. And then oftentimes you'll get into a Fibonacci multiple 1.382, 1.618. This indicator, this is not out on TradingView yet. We're finishing it right now. This will be available as well. These are incredibly useful. Today in the live room, we got a projection coming into the last 30 minutes of the close off a 5-minute graph for a move to 43.55 to 62, and it just exploded out of the 40 handle just straight up into that Fibonacci target. And it was all based on this basic pattern. I tell everybody, if you understand this pattern, you can make a really good living, or maybe even get rich just trading something this simple. But this is the pattern that's going on. This is the indicators here that are coming on. So those are the objectives that are coming into play here. So I'll leave this on the screen for a minute. So like I said earlier and throughout this whole broadcast tonight, really what I'm looking at is trying to find a place where we can determine maybe something is blowing up or there's capital moving somewhere. So this is a big move, you have to admit, for Bitcoin. $5,300 is a big move, right? We're talking about 14% here. So this type of activity is something to be paying attention to, just like when we got the spike up to 1976 on gold and it came off. That was significant. This is significant, what we're seeing here. And I think maybe this is where some safe cash is going. Maybe we're seeing the alternative asset viewpoint of Bitcoin at the moment, and especially getting these Fibonacci targets. The fact that they're there doesn't mean they're going to get hit. But I remember when we were at 11,000, I did a video that Bitcoin was going to go to 23,000. It seemed pretty crazy at the time because it was over a double, and it did. And that was these numbers over, if you can see where my cursor is, that was these numbers right here. So, we went straight to those numbers there, and yeah, it was 23,721. I mean, you look at that, it was nothing, a big deal compared. We ran up these big numbers into the 60,000 handle. But this pattern that we're seeing here is very big, and this consolidation, we're talking about right now a 2-year range that is setting up here, and this needs to be watched very closely, folks. And this could not only is there opportunity here, but it's also maybe telling a story of this dislocation of capital, these unintended consequences. So, I get on these themes, and, sometimes they just come up and I start looking through stuff, doing some deep analysis. I spent a while today going through this stuff. And when I saw this Bitcoin, it just really caught my eye. It doesn't mean we could fade all the way back in and it all goes away, but this is something to be watched. I think there is a signal of some sort coming out that much capital has just piled into this asset class. So anyway, folks, this is going to do the video for tonight. There is no live room tomorrow. Wednesday is the next day at 1 p.m. I'll see you all there. Also, I'll see you tomorrow night here on YouTube. Thanks again for watching. I really appreciate everybody showing up. And remember to subscribe and like these videos. And soon we should have, I think in the next 2 days, we should have out ready on how to get all of our indicators. So thanks again for watching, everybody.